there was excitement in the Zomato stock post the PayTM numbers that what PayTM indicated in terms of a path to profitability, Zomato will do the same. In your book, if I look at the Zomato numbers, are they good, bad, in line?
I think Zomato numbers are in line. I would not say that they are excellent, but definitely they're in line. Basically, if you look at what they've been guiding, the path to profitability in the food delivery segment, they're on the right track as we speak. If you look at the contribution margins, they're at 5.1%. And this is even higher than the peak of the pandemic levels, which was around 4.5%. So if you look at what has happened this quarter is that clearly in the last 2 3 quarters we are seeing trends wherein they are trying to focus less in terms of growth and focus more in terms of profitability. They are trying to actually mine the customers which are loyal in nature, kind of increase frequency. So these are two big drivers, revenue growth being in the range of 25-30% and profitability increasing consistently on a Q on Q basis. So I think these are two monitorables for the food delivery business. And you are basically trying to exit markets where you are making losses. So there's a clear focus in terms of driving efficiencies, reducing delivery charges, exiting loss-making markets. So that's a good thing, for the company.
So is Zomato a buy or a hold according to you?
So I think at these valuations, Zomato, could be a, kind of a compelling buy because if you look at the stock price, I think last 3 months it's come down by close to 25-30%. And if you look at it in terms of PV EBITDA valuations, just on a forward basis, and assuming that they achieve this, 4 to 5% of EBITDA as a percentage of GOV, what they've been guiding for over the next 2 to 3 years, the stock is currently trading at somewhere around 25 to 28 times EV/EBITDA for the food business. So there is value buying here, as far as the standalone food delivery business is concerned. But one really has to look at how Blinkit shapes up because that is very important. So if you look at the company today, I mean, close to 80-85% of the losses are coming from the Blinkit business. And one does not know the unit economics of this business, how it is going to pan out. I mean, the AOVs are high, the frequency is high, the order growth is fine today. But once Blinkit scales up beyond, 3 or 4 cities, or maybe goes more in terms of the tier 2 and tier 3 towns, will this economic sustain and where will the losses be? So if you include the losses of Blinkit, I think the company is trading at valuations of close to 35-40 times EV/EBITDA, which is a fair valuation. But the core food delivery business, I think, is a value proposition.
Really appreciate your time. And thank you so very much for joining us. There are two stocks I